How do you, an agency, a government agency, set up by government, run by government, going to rate government bonds?
Is this a case where the government shouldn't enter into or play in the space of the private sector?
When it comes to participating in certain aspects of regulation and the market, I prefer the private sector to drive it.
I'm going to take a position of an African user who sees compliance as giving my data information. So where does all this data sit? Is it with the regulators or with entities, the organizations?
It's as safe as you take safety serious. And I always say that to users. If a user can appreciate the fact that you need to have a strong password, you need to make sure that you're doing good housekeeping in terms of the management of your information. That's where most vulnerabilities sit. Because by the time it comes to us or by the time it goes to the regulator, it's always a user either complaining and saying, this is what happened to me. And then when we unpack in that question, we're like, but what happened before it happened to you? And then we can normally find out some loopholes in terms of what perhaps it was social engineering, somebody calling you and asking you and saying, hey, we're from Binance, please give us your ABC.
We just don't want you to comply. We want to know the extent to which you comply, because reporting that you've issued commercial paper is one. But we have a whole guideline on commercial papers, which is telling you that not more than 40% of your AUMs must not be invested in commercial papers.
Really?
And so some people can issue more commercial papers than necessary, and then they will underreport it to the regulator. And so if you don't do the further checks, you won't be able to identify those issues.
Hey there, good morning and welcome to the Africa Discourse channel. Again, as you know, we bring you key voices shaping the future of Africa industries. And particularly today, we are talking about digital assets, and we're live at the Digital Asset Summit Africa. And I have with me Mr. Larry and Mr. What's your name again? Please forgive me. Mr. Mensah.
Awesome.
Mensah Thompson. So Mensah is with Mensah Thompson with the Ghana SEC, Securities and Exchange Commission, a director or deputy director.
Deputy Director General.
Deputy Director General. And Larry is
The head of legal of Binance for Africa.
Oh, perfect.
Amongst other hats. But yeah.
Interesting. We're going to be diving deep into digital assets and just understanding KYC's realities, AML for the African market. Primarily, our goal here is to ensure that we bring you understandable insights, actionable one that helps you make bold moves. So before we begin, let me just give a quick intro about what this is all about. So talking about regulatory tech and industry readiness, just compliance isn't just a checkbox. Of course, we require trust. Is a trust infrastructure, and on this episode, we would explore both regulatory tech solutions, right? Speaking to individuals in industry, the people who actually make these regulations, and ensure that you are able to be onboarded on that, and look at how banks and startups can co-build readiness. And joining me is Larry and Mr. Mensah. How are you? Good morning.
Good morning. Thank you for having us. I'm good. Can't complain.
How are you?
Early flight.
I think before we commence, could you maybe just help us with a brief introduction about yourself, your background, and what you do at Binance?
Sure. Larry Cooke. I've been at Binance for about 2 years. Currently, I'm the head of legal for Africa, amongst other hats, as we're still building out the team. So a lot of the BD development and strategic partnership initiatives and working together with regulators and law enforcement is something that falls within my mandate. Before Binance, before I was on the side of digital assets, I was actually at the South African Reserve Bank.
Oh, interesting.
For about 2.5 years, nearly 3 years, and looking after specifically the Fintech department. Yeah. So the IFWG, I think most of you guys are familiar with, as well as the two naughty children of a reserve bank, which is the numismatic industry, where they create numismatic coins, gold bullion coins, and the bullion side of things with silver and gold bullion. And then before that, I was at Absa Bank, but Absa, when it was still Barclays Africa Limited, and they were trying to make the whole continent blue, and then they pulled out because of regulatory reasons.
And now Absa made it red.
And then Absa made it red. So I was there through that, into the Reserve Bank, and before that, legal professional, so Weber Wenzel and other legal things.
Oh, there you have it. Larry has quite immersive experience and is going to bring you critical insight that helps shape that future for us. Hi, Mr. Mensah. Just give us a brief background about yourself and the job, your role, you at the SEC.
Thank you very much for having us. So Mensah Thompson, Deputy Director General for the Securities and Exchange Commission.
Yeah.
And particularly leading our virtual asset charge. I mean, when we took over, I mean, I was appointed by the president.
Yeah.
The current president when he took over earlier in the year. And then so we, the new leadership of the commission, saw the gap. And one of the gap has to do with digitalizing a lot of the products in the securities sector. We've seen that the central bank has moved quite a long way in terms of digitalization, fintech, and innovation.
Yeah, that's right.
And the SEC is lagging behind. And so, as Deputy DG, I took it upon myself to drive that. And we've been driving that innovation with the central bank. And so together we are working on the virtual assets draft, a service providers bill, which is the law that's going to regulate virtual asset space in Ghana. We are co-regulators. In fact, if you look at the service provision, we have more licenses even than the central bank. Out of the 14 services that the bill is going to regulate, we have about 9, and BOG have just about 5 or so. And so,
is that a competition now?
No, it's not a competition. I'm just saying that.
Yeah, I got that.
In terms of the regulation, we have a much more wider scope than the central bank. Okay. But we commend the central bank because they have been driving this for quite some time before we came in. Yeah. They have been the key. They have been financially funding all the regulatory regimes that we're putting in place. And it's very much commendable. We're glad that they've attached a lot of seriousness. The governor has said it himself. I've said it a number of times, how he wants to see this bill see the light of day. Yeah. And so, I mean, we are happy with what DASA is doing because we see that if the bill is passed, one of the key challenge will be public education and sensitization. We need to get our market operators ready. We need to get the public ready to take full advantage of what the digital transformation this has to offer. And so you are ahead of time. You've started this, and we're happy to support in whatever support we can give you to be able to achieve what you've set out to do. Next year, we hope that it's bigger and better, and we're able to carry the citizens along in this space, because the innovation is quick, the transformation is so rapid, and we don't have to leave the people behind. And so we're happy.
Let's come back home a bit, and just a quick question to both of you. And we do understand that compliance is a trust infrastructure. And how does compliance sit within the digital asset space? Is there what can you say about that?
Yes, I mean, from Binance, we've had our journey, right? And where we are right now is we see compliance as a competitive advantage. So it's no longer this thing of compliance being a checkbox or compliance being an afterthought. You need to make your users understand why it's so important, why it protects them, and also give the regulators the comfort that you are going over and beyond what might be required. As Binance, because we're a global company, we have the privilege of looking at various different compliance standards right across the globe. We license in about 22 different jurisdictions, over nearly about 300 million users. That means we're doing something right. We're trusted. But turning the mindset of compliance to something that is wanted by users and also satisfies the requirements by the regulators is something that we actively and proactively, pursue. I think some of the advantages is that being a global enterprise, we also use the highest standard. So if there's something in Norway or in Spain that sets compliance at a certain level, we'd roll that out throughout our organization, and then we'd also share those learnings with regulators during our conversations. And that's one way we kind of bridge the gaps, because at the end of the day, there's two sides. There's a good side and there's a bad side.
Of course.
And we don't...
Maybe you want to highlight that for us, key examples of some of the good sides and the bad side, so at least our users can, our listeners can understand.
Sure. So
dynamics.
The bad side is the fraudsters, the criminals that's trying to get into your assets, that's trying to manipulate who they are when they try and approach companies such as ours, so they can get access to your information, your personal information, etc. And the good side, so that's the bad side of things. The good side is us being able to identify risks, through transaction monitoring, us being able to report to the regulator the nefarious actors that we don't want on our platforms, and eventually getting them locked up and arrested. So that's the good and bad side. And where we come in is creating solutions that don't look as if it's like this over compliance and this tedious regulation. We focus a lot on education and making the users understand the importance of why two-factor authentication is necessary, why we don't just do fingerprints, biometrics, we don't just do a different passphrase keys for your access, but we also do liveness checks. So before you complete a transaction on whatever service you might be using on Binance platform, we do a liveness check to make sure it's accurate. And then also, if we need to send any reports to the necessary regulators, we can also show them better insights, because I think a lot of the time regulators receive a lot of information, but they don't have the luxury of time of processing that information and eventually acting on that information. So that's where we try and make it a competitive advantage, where we present and provide more usable information. And compliance is that leg. So as much as compliance has been tainted from traditional banking as this heavy paper, heavy requirements,
a lot of documents,
documentation, we change it. It's about having that digital identity, understanding where your information is going, what's your information being used, and ultimately protecting the user. And by protecting the user, protecting the economy.
Yeah. How does the SEC see compliance from your perspective? You sit in policy and regulation. So how do you see compliance, and how do fintechs, banks, and the likes, or people within the security exchange framework work with you?
Well, as a regulator, we take compliance very, very seriously, especially with our market operators.
Yeah.
We have our own compliance reporting portals that we use. We've digitized most of our compliance and reports, receiving models. We've also changed from a compliance-based reporting to a risk-based reporting. And so...
What does that mean, changing from a compliance-based reporting to risk-based reporting?
Basically, what is this, as a market operator, every license have a set of reports you need to give to the regulator.
Yeah.
So you have to file these reports as and when they are due. And so you tend to look at, okay, you're supposed to file this. Have you filed? You're supposed to file this. Have you filed? We're supposed to file this. Have you filed? But now we go beyond that. We want to look at, okay, you filed. But then in analyzing the data, we want to focus more on the risk residue and what that has on the entire organization, on the organization one, and also on the market as a whole. And so we just don't look at one entity, we look at the market as a whole, and we tend to, deal with it. And most of the issues, I also sit on the Financial Stability Council, where all the financial sector regulators sit. And so we tend to have an overall picture of what the risk even affects other financial sectors. So if it is the security sector, if something happens with the fund management space or asset management space, how does that affect the pension space? How does that affect the insurance space? How does that affect even the central bank or the commercial banking?
Is it a case that the SEC is actively working with organizations to build a very robust infrastructure, robust framework for these reports and this compliance checks to happen?
No, come again. I didn't get the question.
I'm saying, is it a case where the SEC is actively working with organizations right, to build a robust framework for compliance to happen? Because you are talking about receiving reports and the likes, and they have to people having to file, right? I'm looking at how that works in the real world scenario. Are people really compliant with that?
Yes, you have to, because there are penalties. It's not. I mean, there are severe sanctions if you fail to file your reports on time, and each day you fail to file, the sanction, the penalty, counts, and we really enforce it. We have a whole legal and enforcement department that enforce penalties, and they make sure, that people do comply. And so in terms of compliance, we don't have much of a problem because most of our market operators do comply. I think where the challenge is the integrity of the data that they provide. And that's why we've developed a second layer of mechanism where we're now able to go back to verify. So we have on-site inspections and off-site inspections of our market operators. And so the off-site inspection is just the analysis of the data you supply to us. The on-site is where we actually send our officers to your premises. They get access to your system. They verify the data you provided. They go behind. For example, when companies issue commercial papers, which is a short-term instrument where companies used to raise funds, and the company has reported on their books that have issued maybe X million commercial papers. And we have all the lists of the companies you issued the commercial papers to in your financial statement. So we go behind to verify whether indeed the companies issued the commercial papers, indeed, whether, and so when we take the placement report of fund management company, which is a report that shows where they've invested people's money, or the investment, what we call the AUM, assets under management. We want to go behind and see if indeed what has been reported in those placement reports are accurate. And so and that is the risk-based compliance. We want to look at. We just don't want you to comply. We want to know the extent to which you comply, because reporting that you've issued commercial paper is one. Well, we have a whole guideline on commercial papers, which is telling you that about not more than 40% of your AUMs must not be invested in commercial papers.
Really?
And so some people can issue more commercial papers than necessary, and then they will underreport it to the regulator. And so if you don't do the further checks, you won't be able to identify those issues. Commercial papers must retire in at least 100 days. People don't retire this in the 100 days. So you have to go back and see if they are retiring the commercial papers when they fall due. So all these are things that we go back and we check, and we ensure that, the reports and the compliance mechanism we put in place, the people are conforming to it. So it's a lot of work for us.
From a regulator standpoint,
I cannot even tell you how our asset management, what we call the fund management departments, complain. And so we have to put in the infrastructure, and that is where digitalization innovation comes in. So now we're looking at how do we even digitize some of these things. How are we able to the compliance portal is one, but what other innovation can we put in place to ensure that we're able to do that? Apart from that, let me mention this quickly. If you look at even, we have one key responsibility of also monitoring the stock exchange, for example. Currently, as we speak, we do not have a system that's able to monitor the stock market real time. And so our issuers department, who monitor what is happening on the market, to be able to identify the AML, CFT issues, insider trading, arbitrage, and all those key regulatory issues which we look out for, are not able to do so in real time. Why? Because there's no system in place for them to be able to do that. So what they do is that they extract post-trading data from the stock exchange, and then you manually go through it to be able to flag the transactions. But it's post facto. What do you do with that? By the time you the regulator, you're able to flag it.
The deal is done.
The deal is done, settlements have been made, and now you're going back to react post facto. And so when we came in, we're trying to now put in measures in place to be able to have live access to the exchange. We're able to look at.
So yeah, when you say when we came in, you're speaking about the context of Ghana, right?
Yes, I'm speaking about the new leadership of the commission. So I'm telling you some of the challenges we inherited when we came in and how we're trying to resolve these challenges at a much faster rate, because they are critical to our work as a regulator, but most importantly, they are critical to the survival of the market. We need to ensure that the market is safe and robust. We need to ensure that Ghanaians have access to safer investment options.
Okay.
And that means keeping the stock market stronger and safe. Currently, the market is experiencing some liquidity issues. We're looking at how to resolve those liquidity issues. If you come to the commodities market, we're looking at how to improve on the number of commodities that are listed on the exchange. If you come to the fixed income market, we realized that when DDEP happened, we saw a lot of downward trend in the fixed income market. Now, with the stability of the CD and the macroeconomic indicators, we can see some improvement and activities on the fixed income market. We're looking at how do we improve also on the fixed income market. The pensions aspect is there. But most importantly, how does all this improvement affect Ghanaians, affect investors, businesses? We're looking at how to help businesses be able to have access to cheaper capital, how to raise capital in a more cheaper and effective manner. We're looking at how we're able to move most of these funds that are invested in the security sector, how they're able to move through a transmission mechanism into the various productive aspects of the economy.
Okay.
That will drive rural growth.
I want to touch on something quickly, and I want Larry to comment on that. So you earlier on you spoke about an issue about real-time compliance, right? And I'm sure in your field, Larry, with Binance, you do real-time compliance, right, in terms of transaction and the likes. So how important is real-time compliance, and what infrastructures can partnership together with policymakers bring about, help make that feasible?
No, excellent question. I think exactly to his point, we had a very well-positioned place in this market, in this industry, as it's still maturing. And what that leads to is, or what that assists us with, is compliance by design. So that means as we design in products, as we design in this ecosystem that's still yet to get mass adoption, compliance is already something that's factored into and baked into everything that we do. So we already have all the skills that's attached to the traditional markets. So you find transaction monitoring, KYC, 3 lines of defense, all of those elements are already factored into it. But something that also is a nuance around this is always your resources. Do you have the right resource in terms of personnel that have the right knowledge set and skill set in this volatile market, yet still has appreciation for traditional market factors? And we also discussed about certain macroeconomic policy indicators. Do they also understand that by pulling or providing certain products and pulls one lever, this is how it might impact another country, that especially as a global corporate institution, we can't copy and paste certain compliance methodologies. So all of that gets factored into, and we find ourselves in a good space where we can co-create with regulators, such as in Ghana, where as they design in the legislation, we're happy to give input, highlight certain areas in terms of what does work, what looks a bit more practical, rather than just doing it for the sake of doing it, and also then implementing certain solutions to what their challenges might be, because as you can appreciate, every country is very specific. So the concerns they might have, as was mentioned, one being liquidity, one might mention about pension considerations, all of those things can then be tailor-made and say, okay, if you're trying to manage or maintain certain risk profiles or appetite on certain elements, we can then assist in that. And again, as someone that sees compliance as a competitive advantage, we can also position ourselves into steer the industry, because that's how you also get adoption by institutional players. Exactly, because if we show that we are willing to work with regulators, it kind of takes away the stigma or the stereotype as from the user's perspective and other participants that are trying to work on the gray areas and, you know, not be so forthcoming in terms of their compliance deficits, perhaps.
Interesting. So I just a quick one. Let's talk about complaint risks and safety, right? So I'm gonna take a position of an African user who sees compliance as giving my data information. Talked about livelihood check earlier on, and that's like maybe your face, and so where does all this data sit, right? Is it with the regulators or with the entities, the organizations? So how secure are these data? What was the safety precautions?
So let me take a step back.
Yeah,
it's as safe as you take safety serious. And I always say that to users. If a user can appreciate the fact that you need to have a strong password, you need to make sure that you're doing good housekeeping in terms of the management of your information. That's where most vulnerabilities sit. Because by the time it comes to us or by the time it goes to the regulator, it's always a user either complaining and saying, this is what happened to me. And then when we unpack in that question, we're like, but what happened before it happened to you? And then we can normally find out some loopholes in terms of what perhaps it was social engineering, somebody calling you and asking you and saying, hey, we're from Binance, please give us your ABC. You know, so, and that's why we're very specific on user education and showing them that don't take sources from unofficial channels. Nobody's going to call you and ask you for your past phases. No one's going to do certain things. So that's probably the genesis of where a lot of why compliance comes in. Because if I want to phrase it in a different way, I'll say the regulators are actually the big brothers, right? They're the ones that come and try and make sure that the users are actually being more responsible with their information and also taking away the bad players. And we kind of sitting in the middle as they exchange. So one, we communicating with the users, we managing their data, we storing it according to whatever data regulations might be applicable at that point in time, overlaid with the latest technology and security. From our end, cryptographic being the one that's topical because it's cryptocurrencies.
Yes.
One day we'll move to a space of quantum graphics.
Yeah.
But before we get there, and then we obviously, as and when needed from the regulators, you know, per their investigations or whatever mechanism they use to request that information, we would then provide it based on the legitimacy of the request. Well, it's not something where we would just give anybody that asks for information of the data. So we make sure that the channels are secure. So in other words, how the conduit is transferred from a technological perspective, we make sure that we're meeting and talking to the right authorities with the necessary mandate from a legal perspective to manage liability. And then the third thing that we go over and above is making sure that we maintain those relationships. I always say this whenever I go around the continent, is that there's no way I'll get into somebody's house and just open up the fridge.
Of course.
Right?
You must be invited.
You must be invited. Yeah. And that's the African hospitality thing. You just need to come and then you'll be invited to take the next step. So it's always key for us to build those relationships with the regulators so we can understand what are the concerns, what are the issues that we can tackle together, because ultimately, again, talking about the good side and the bad side. Either you, on the good side, you want the economy to flourish, you want everybody to be successful, manage their money properly, or you want to be somebody that's taking advantage of other people. And we obviously stick into the good side of things.
Oh, awesome. Thank you so much for sharing that keen insight. And let me come back to you, Mr. Mensah. How do you see private-public partnership together with policy regulators improving compliance in Africa?
Well, in terms of business, we see that. Can I get some water, please?
Yes,
we
please.
See,
can this reaction team get us water? Thank you very much. Okay, welcome back. If you just joined us, we're having conversations around compliance, and with me is Mr. Larry and Mr. Mensah, and they're sharing keen insight about the future of compliance and how Africans can be onboarded on this journey as well. So back to you again.
Yes, we see that partnership to
Maybe I should take the question again so that it helps. I was asking what does public-private partnership look like to help improve compliance in Africa?
Like I said, we see the public-private partnership manifest in various sense, and as a regulator, we don't think that it's immune to us. I mean, those partnerships exist in various forms to be able to provide various services in the market, including compliance. But when it comes to participating in certain aspects of regulation and the market, I'd like to drive the private sector. I prefer the private sector to drive it instead of either government.
Why would that be?
Or instead of either government or even government PPP. How do you, an agency, a government agency set up by government, run by government, going to rate government bonds?
Is this a case where the government shouldn't enter into or play in the space of the private sector?
So there are certain spaces I think the government should avoid the notion of conflict of interest or even the reality of it. And government must be able to allow the private sector to lead in certain areas. The same with innovation. As a regulator, I look at, so people say, okay, should regulation lead or innovation lead and regulation will follow?
I'd like to hear your thoughts.
Yeah, no, I want to.
And I always prefer innovation to lead, so that regulation can come in, because
regulations sometimes come in very harshly.
And even apart from that, I'm a laissez-faire regulator. I look at, if you look at the mandate of the SEC as a regulator, regulation is just one aspect of our mandate. We have market development, investor education, but most importantly, I take the mandate of market development very, very seriously. And if you're a regulator and you are keen on market development, you allow the private sector individuals to drive the innovation.
Yeah.
So you can learn as a regulator, because most of the new products that are coming in now, we've received applications to license certain products that even in-house we don't have the capacity and training for it. And when it comes, our people put it aside and they say, hey, because we don't have the capacity or we don't have the skills in-house, and so we're waiting. I said, look, that is the whole purpose of sandbox. You have a sandbox regime you can put people under to come, and it becomes a mutual knowledge sharing platform where, as development goes on, as a regulator, you're taking the opportunity to learn and train your people to be able to provide the needed regulation in the sector. The digital asset space is a very key example. We have to come up next year. We have in our L&D programs, we've made provisions to train our people. Okay, the market is fast ahead. But the good thing about the market is, as innovation comes in and people are coming up with different ideas, it gives you, the regulator, the opportunity to see various perspectives and aspects of the market that you have not seen. And you must be prepared as a regulator then to learn even from the market. And you are not the repository of knowledge because you are the regulator. Okay, and that is why I prefer innovation to lead. And when it looks,
are you sure you're not going to get backlashes from some of the other regulators? I mean, across the African continent, maybe not just. Of
course, when they sit in the room, and I don't shy away from this. I mean, you can understand them when they speak. Sometimes you look at some of the risk that sometimes innovation brings to the market, and how that risk can be transferred into other areas of the market. But that itself shouldn't be a disincentive to allow innovation to drive the market. Because I think that, for example, if it's a new product, until the product has been rolled out
and tested
and seeing how the market responds to it, any regulation you put in place will not be comprehensive enough. But when the innovation is out and you the regulator, You've seen how the market responds to it. You've seen perhaps the challenges associated with it. You've seen what measures were put in place to address those challenges. And so when any regulations you're putting in place have a full perspective of the product. But if you put in the regulation first, and then the product rolls out and several spheres of the program are coming up, now you have to be coming up with every day new guidelines, which is good. But I think that there must be a fair balance between regulation and innovation. And that is what we are trying to do now, the current leadership of the SEC, we're trying to do now to enforce regulation, but most importantly, to drive innovation, to help the market develop.
And in this, you're working together with the private actors.
Yes, and all our market operators who have engaged us know that we've changed the face of the SEC in Ghana now. We're not the SEC now that is say, okay, we take a hammer, boom. No, we want to see the market grow, because without the market, you're not there as a regulator. Who are you going to regulate as a regulator without the market? And so we want to drive innovation. We want people to come up with different ideas. We want to see people's ideas that have been on paper for a long time. We want to see it rolled out. But how do we do it in a fair and safe manner? Is by putting the necessary arrangement in place. And so the Digital Asset Service Providers Bill that we are developing now, there's a vast room for sandboxes and regulatory sandboxes.
We will touch on sandbox shortly.
And we would encourage the market to take advantage of the sandbox, the innovators to take advantage of those sandbox regimes to come up with the various ideas. We also encourage the university campuses who have development laboratories and stuff to turn those into innovation hubs. And we, the regulators, are willing to collaborate with them to see how these products are able to go live and provide the necessary service that they are needed.
Thank you so much. Larry, you quick sense on that. Should innovation lead or regulation lead? Or does the regulator have requisite capabilities to innovate?
Yeah, so speaking as an ex-regulator and being at the forefront of this digital asset revolution, right? Yeah. I'd say it's a bit of both. I don't think you can sometimes put one before the other. And I'll give you a couple practical examples, right? Being a regulator, completely have appreciation for your mandate, right? Your mandate is what is your North Star, as he eloquently raised, because ultimately the concerns of an entrepreneur or a business is not the same as a regulator looking after the interest of the entire nation. Right? So that
entire continent in
100%. So you can't take that lightly. So of course there would be a bit more hesitancy in moving too fast, because if you move a dial too fast, the consequence of that will move as quicker, if not exponential. That's right. Because we're in this era of exponential consequence. So full appreciation of that. I think where sandboxes perhaps become more relevant is perhaps looking at ways we can innovate around the mechanics of a sandbox as a regulator, me switching on to the regulator hat, because I think there's always been this parent-child relationship associated with the regulator and market players that want an entry, where it's like, you can't do that, you're not supposed to do that, as opposed to a regulator having open-mindedness to lean in with curiosity and say, you're not supposed to be doing that, but you can do this better. And I think that's where the nuance is, because the regulators are so inundated with so many requests and they have a lot of work. Trust me, it's a lot of work that they're doing. Because they have all of that, they need to still have time to still put on their creative hat and say, I can hold hand with this partner, and try and develop out something, while still not looking as if it's conflict of interest, because why are they giving attention to one player as opposed to another? So those dynamics can get you in really sticky situations, because public perception is everything. You just need one person from the public to say, oh, the regulator is favoring this person, whereas this person just went through the normal sandbox
political
process. So very aware of that. So my suggestion or my comment to that is that there are frameworks that are in existence for them to manage that. It's just about looking at those
examples of this framework,
like the sandbox, being.
How can this be accessed?
So one of the public-private partnerships, maybe the sandboxes could be better managed with private intervention. Right, as opposed to making it purely regulatory monitored, having some of the counselors, advisors, shapers.
Say that again. So the sandboxes should be privately managed.
No, not privately.
Okay,
I
don't really understand.
I'm saying that sandboxes are created by the regulators as an initiative to be a bit more proactive in terms of their regulation, while not stifling innovation, but allowing the market to grow in a risk-controlled environment. My suggestion, and again, it varies different country to country, regulator to regulator, is saying that perhaps there's opportunity in reworking those type of models where you have that private partner, private government relationships intervening at a sandbox level to try and co-create and manage, the applications that are received. And that's just an example I'm giving off the top of my head. But what I'm saying is the principle being is that there's a real mandate management that takes place at a regulator's level, right? There are certain streams such as a sandbox where they try to balance it out, not managing conflict of interest, because conflict of interest can also be managed with a bit more publicity, more visibility to the public, and what the processes are. So what I'm saying is maybe there's opportunity for the private sector to assist the government or assist regulators to say, how can we make this sandbox environment, as an example, be more seen as more transparent, seen as more effective, seen as more efficient? And those are the capabilities or competencies that could be focused on in terms of managing that, if that makes sense.
Yeah, it makes sense.
But let me say that our response to that is the innovation hubs.
Okay.
Where we want to...
Now that's the regulator
standpoint. Yes. Where we want to now... the universities want to cite or get most of the development labs on the university campuses to innovation hubs, where we partner with them as regulator, so that they take charge of that, so that it doesn't look as if the regulator is actually playing in the market, because innovation is not a regulator. It's not your job as a regulator. It's not your job to be seen to be actively favoring one innovator over the other. Yes, but we also have a mandate to develop the market, and so if there's a way we can outsource that part of those roles. For example, if we put you in a sandbox regime, then maybe we hand you over to maybe an innovation hub, I say university campus, that will supervise what you're doing, and we just observe the testing, the information sharing approach, and then once you've passed through all the phases and you're about to go live, we're able to vet and see if indeed this product can go live or not, so that it's not the regulator now at the end of the day vetting and helping with the development at the same time, and at the same time approving, which will appear. We just want to avoid the notion of any impropriety or any notion of conflict of interest.
Yes. And that's a good point to that, because and this is where I see these hubs playing an instrumental part in community development.
Before you touch on hubs, should the hubs be run by the universities? Do they have the required?
I'm answering that exact question. So yes and no. Okay. The reason I'm saying yes and no is because there are certain regulated entities. So for instance, somebody that's already under the auspices of a regulator, and they're developing another product. You can't kind of treat, or you can't put everybody in one bucket size fulfills all type of scenario. And plus, because of sometimes the product is already so advanced because of the adoption, and you're talking big money, big transactions, you can't necessarily leave that in the hands solely of a university. They don't have that expertise, the appreciation of risk to navigate that.
They're not even in the reward.
Not even 100%. And that's where you kind of need to work closer with the regulator to say, this is actually, they need the data insights to say, this is actually how the market's moving. This is where, the stable coins inflow and outflow is actually taking place. This is how local people are using NFTs to transfer value across border. This is how, those are the type of conversations that need a certain higher level of bigger conversations. So I would say that you probably need to tier them to say, okay, you want to start off at the rudimentary, elementary level. Universities are the way to go. Then you get one step higher to the SME model. Right. Then you need a certain level of expertise. Get in the fund managers.
Hierarchy of
yes. And then when you start dealing with the blue chip entities that are regulated in multiple jurisdictions and are talking about moving a lot of impact in the market, then you work closer with them.
Well, absolutely. I mean, that's the same model we adopt. Yes, everybody is not going to an innovation hub. Okay. For example, if Binance, we've licensed Binance. Binance have been doing this for quite a while. They're coming up with a product which is new. you can put Binance and Innovation Hub because one, they have not just the expertise, they have also the financial resources to develop the product in full up to the point it goes live.
Because they're also not just working in your market,
yes,
in other markets as well.
Exactly. But we're looking at how does this drive innovation among our young people? And as a regulator, we believe that we need to encourage that. And that's what the Innovation Hub seeks to do.
Level.
So young innovators, people who have ideas, but don't even have the tools, don't have the resources to be able to see them to full production.
So would this be a case where the entities such as Binance and the big players can also come in and push some resources down?
100%.
Exactly.
100%.
They can put in different mechanisms to see. And a lot of people have used this to come up with new products entities. For example, they come up with a problem. They say, okay, we want innovators to come up with a solution to this problem.
More of a hackathon?
Yes, and whoever comes up with a good solution, will receive funding to full development, will do it. And these are good models that will help innovation. And so the approach is not to put everybody in one basket and say, hey, once you are in the sandbox regime, go into an innovation hub. It's not going to work that way. Okay. But as a regulator, our focus also as policymakers is how do we encourage innovation among our people? And we understand the challenge of our people is access to resources, access to finance. Yeah. And so the Innovation Hub is supposed to address that and not big players like you, Binance, who have all the millions to pump into to L&D.
Yeah, you see, and you raise an interesting topic because we, as big as an institution, we can't just, I gave the welcome into the house, open the fridge scenario. So we also need to make sure that the projects are fit for market, right? And that's where it comes in, because there's no point in you trying to sell a C-suite type investment product, whereas the educational level is not even at that level, or what is accessible or available in the market isn't fit for purpose. And that's where partnerships between regulated 100%
the private sectors
is so key, because finding that sweet spot is the magic. Yeah. And working together to say, okay, this is what implementation looks like. This is what rollout looks like. And not just being reliant on one big player. You need the ecosystem itself to mature to a point where it's beneficial for everyone. And that's the key.
I think we're going to wrap up with this. And thank you so much for sharing keen insight. I think this has been a wonderful conversation so far. My final question would be, how do we see regulation cut across Africa, right? So that we can limit, or we can take away the barrier of entry for players, right? So how the SEC in Ghana and the SEC now in Kenya and the SEC in Malawi can have maybe a set of regulation that Binance could work with, and they don't have to maybe reflect on each of the regulations for each of the markets. And where do we see regulatory tech and compliance in the next 5 years to 10 years for the African market? So
I'll keep this short, right? Because like I said, both worlds. So I think before you even look outside of the country, you need good coordination between regulators internally, right? And getting that is quite difficult because of the change of parties, change of politics, etc., right. and having appreciation for that. So it's not an easy feat. But once you get that right, get some coordination internally, then it's something where your key decision makers in those regulatory bodies, right, need to be reaching out to their counterparts in different countries. We always have conferences where it's like all the central banks together, all the central SECs together. And I think those are the opportunities where relationship building needs to take place, because Africa is built on relationships. We need to embrace what's truly African authentic about us. And from that, you already have those rails such as the African Free Trade Agreement agreement where you can kind of set things in motion, but you need that political will. You need that regulatory will. You need one or two good sponsors from a private space, to drive those initiatives. And if you have those elements in place, I think in the next 5 to 10 years, we could create those mega regulatory hubs, such as what they've done with, and looking at the digital asset space, like what they've done with MiCA, for instance, in the European Union. But for Africa, our problem's a bit more unique. We need to build a better rapport amongst each other, relationship, trusting amongst each other, especially amongst regulators. There was something cool that Ghana and Rwanda entered into with the MOU,
Fintech passporting,
and that is And even we've seen it in the tourist industry where, you know, we were lifting up
visa
visas.
restrictions on African.
Those are the type of small changes that can make big impacts. And it just takes one or two fields. And I think the digital asset field allows for that, where we say, and we're all still trying to figure out what's going on. You see Trump rushing off doing the Genius Act, trying to take what, again, Africa's been doing, you know, and commoditize. But he's a businessman, so you can't fault him on that.
Of course.
You're right. But now we can take those same type of thinking and initiatives and make sure that it's effective on our continent. Stable coins is probably our biggest opportunity that I hope that Africa, we do not sleep on. But there's more examples than just stable coins.
That's a very big hope. We hope Africa doesn't sleep on that. Mr. Mensah, what will be your take on that?
Well, like you said, regulatory synergy is one of the things. And I think we're pushing for that at the IOSCO level. IOSCO is International Organizations of Security Regulators. Even at WASRA, the West African Security Regulators Association, which is a creation of ECOWAS on how to integrate our financial markets in the sub-region. And so regulatory coordination and synergy is key to ensuring that, what is the developments get to the right areas, the full coverage of the continent, and that there is no barrier in terms of regulatory framework, in terms of what one can do in Ghana, or what can do in Rwanda, or what can do in Kenya. A month ago, I was in Joburg, and I was working in the Rosebank Mall, and I just bumped into a crypto ATM, you know, and I was fascinated. I mean, my first question was, why can't I have this in Ghana?
I know, we should.
We'll get this.
You know,
so Binance would set up a couple of those.
So
let's talk.
So these are things that we want the development to cut across the continent, because if we want to take or enjoy the full benefit of digital assets and virtual asset transformation on the continent, and to be able to remove the barriers of trade, especially in payment systems that exist. And I see how international payment platforms are milking Africans, you know.
That's a conversation to get into later.
Now we're going to have another conversation.
That's a different conversation altogether.
And I always use this example. I go to, let me take gold, for example, or cocoa. I go and farm my cocoa on the field. MasterCard was not there. He didn't go to the farm with me. I farm, I sell my product. And to be able to, I ship my product, and to be able to receive my payment, somebody sitting somewhere is making money for my money.
I mean, they're facilitating it for you, so.
What did he do? Did he water the cocoa with me?
Facilitating, that is
no.
Gents, we're going to get into a bigger conversation now.
But all these have an impact also on trade, because the cost of settlement is also a disincentive to trade. Because if somebody has to buy from you and he looks at how much do I have to pay to settle, what is the cost of settlement on that trade? If there's somebody offering the same product, even at a higher price, and the settlement is cheaper, he's likely and easier, he's likely to go there. And so I think if Africa has to take full advantage, and we must all grow together as a continent in terms of our transformation in the digital asset space. But another place that we must work together is the deployment of technology. How we are able to deploy the right technology for ease of regulation. So in the monitoring of the space, and how that technology is able to communicate with each other for information sharing purposes, so that we have access to information, we know what is going on in real time, what is happening in other places, and how the regulators can be able to tailor-made their regulation, their solution in a way and manner that doesn't affect the forward march of the continent in terms of achieving the comprehensive digital transformation. And so these are the two things that I want to leave with you. And I want to thank, once again, DASA for this initiative. I hope that this continues. Please don't end here. The education must continue. The sensitization, the outreaches must continue, and we must all turn ourselves into digital asset ambassadors where we go, and be able to help our people. Africa, we have quite a significant illiteracy base, and who even struggle to use computer. And so now our farmers who are going to be farming and be able to sell their products in foreign markets, how do they benefit from some of these things? And so the education is very key. And so we don't take what people like you are doing for granted. And as a regulator, whatever we can do to support you guys, to extend the outreach, we are ready to support you.
Thank you so much, Mensah.
And to echo the sentiments, I mean, I think we even made history. I think this is the first time the SEC and Binance in Africa, in fact. So
wow.
So what you guys are doing is amazing work.
Yeah.
No, you guys are doing the work. And again, we can support, from an educational front, from resources, co-creation. That's why we're here. Africa's problems need to be solved by Africans.
Of course.
That's the bottom line at the end of the day. So we thank you for having us, and
thank you.
Looking forward to more.
Thank you so much. This has been the Africa Discourse channel, the Wave of Africa Discourse pod, and this is a digital asset and innovation aligned season where we're highlighting Africa Digital's future. We are here at the Digital Asset Summit Africa, and we are bringing you bold intelligence that helps you make bold actions. Thank you very much. Catch you up. My name remains Richard Joseph. Thanks. Bye.
Thank you.